So this is all part of the research and discovery process, right? And it's a continuous process that is ongoing. Let's walk through the full workflow. So how you go from discovering a business to building conviction that gets you to full position.
Yeah, so I think so. Right now, the next deep dive is going to be on Axon. So I guess it just probably just a good example of how that works. So I like looking at companies before I've decided I want to own them. I think I should. I don't think it's a good idea to start a research process with your mind already made up about, yes, I want to own shares in this company. So just for full disclosure, full transparency for your listeners, I don't own any shares in this. I have no idea if I'm going to own shares in this. I'm a week into the research process and I have a lot more work to do. But really, it's a few things. First, it's more not it's more qualitative research on just making sure I deeply understand their product suite, how they all tie together, what the growth vectors are, what the competitive landscape looks like for each of these products, what market share trends look like, what the runway looks like, and how tapped that runway is, how much longer do they have to grow into their current shoes, how much optionality do they have to add very adjacent and related shoes that they can grow into after these other shoes have been grown into. So just really familiarizing myself with the product suite to make sure if there is if one of the products isn't doing well, or if there's a risk that's surfacing, I'm going to have a great chance of understanding that more quickly and knowing what's real and what's noise, and what to worry about and what to maybe brush off. And from there, and I really like to, I mean, I love primary sources. So the next step of this is going to entail just reading a ton of company information. But before that, I love reading from people in the field who don't have a vested financial interest in saying
Mm.
Axon has an amazing or Axon has a terrible product. I love like Gartner and Forrester and IDC and all these third party research firms that will give you these great competitive landscapes, and just here's what they're doing well, here's what they're not doing well, and yeah, they are getting paid to form these reports, but they aren't Axon IR, so it does feel like a step removed from that extreme bias and that extreme subjectivity. So definitely not objective, but getting as far away from company as you can. Maybe not so far as you're reading. You're reading, I guess, just other Substack articles from people you don't
Sure,
know, and
sure.
kind of just trusting them, and what
Michael
and before
Burry.
yeah, before but yeah, who even is that? But but uh, but yeah, from there, product suite familiarized. If somebody asks me what Axon does, I can answer that in a very concise way. That it's the Albert Einstein. I could explain it to an 8-year-old because you actually understand it yourself. But from there, it's going through probably about eight, and this is a very tedious process. Like their last 8 quarterly filings and earnings releases and shareholder letters and conference calls, because they cycle through. I mean, there are themes from quarter to quarter where you're going to miss a big focus area if
Right.
you listen to one earnings call, and don't listen to a lot of them. But when I listen to 2 years of earnings materials and investor days from this company, you really get a full picture of their puts and takes in their financial engine, what matters, what's driving them, what are sell side analysts worried about and want to look better, because I mean the Q&A is a great hint of that. They will, I mean, the Q&A analysts will routinely give you, here's what our credit card data is looking like that we spent a ton of money on, but here you go. Now, what do you think of this? And so it's just, you get so many nuggets from these investor conferences and these earnings calls and these investor days that to fully understand what an investment case, and to fully understand if there's this intimidating risk that surfaces tomorrow morning, do I get excited that the stock fell, or is that warranted? And maybe it's time to get a little worried, and that's pretty real, and maybe the story changed. But there's a lot of reading that you need to do to get there. And I know people say, well, just do Gemini or do ChatGPT and read that 3 or 4 paragraphs, and I think you can get a decent amount of the way there doing that. But when we're trying to differentiate around the edges and trying to outperform by a percentage versus a benchmark of 100 companies for 10, 20 years, I think just especially in the age of AI, a willingness to work hard is going to become increasingly unique and increasingly rare, and I think an increasingly powerful source of competitive differentiation versus everyone I'm trying to outperform. So if I can get 95% of the way there with Gemini in an hour, or I can get 100% of the way there with myself in 3 weeks, I'm going to get 100% of the way there with myself in 3 weeks. And I really do think that 5% is important.
Very interesting. Uh, a couple questions off that, but first off, you mentioned Axon. So what was the signal that told you, hey, this is the company I should go do a deeper dive into?
Paid subscribers bothering the sugar honey iced tea out of me to start reading about it. No, honestly, I'm not even kidding. But there were, what I'll do is if, I will, like for a company like Axon or a company like Spotify or these companies that aren't in the core coverage network, but I am impressed by, I will just continue posting very surface level earnings coverage to keep track of numbers, so that when something like Axon goes from $900 a share to $500 a share, I wasn't ready this time just because timing didn't work out very well. But I want to have done all of that research before that happens, so that I know I'm not in a position to evaluate that opportunity right now, which is a little bit frustrating. But I want to know if this is something, again, to take advantage of or not to take advantage of. So it's a combination of, there's a heavy filter personally where I will give subscribers options of companies that I'm willing to kind of look into and willing to study. Like if they ask me to study Open Door or a quantum computing company or something that's just maybe not, just something that I'm not going to, I circle of competence, all those things matter. And maybe focusing on things that I think in a higher quality way, but then giving them an option between these four higher quality companies, that which one do they want, and they picked Axon. So that's what I'm going to write about.
Got it. Yeah, listen, hey, you got to listen to the people that pay the bills. Makes sense
Absolutely.
to me. I guess then a couple pieces off that. One, maybe this is a quicker one. Do you utilize technical analysis at all in your methodology? I know there's some long-term investors who will look for, simple things like 200-day SMA or something like that.
Yes. Major moving averages, major, like just, and it's just, TA for me is a very elementary, TA is not elementary, but the way I do it is a very, very elementary. Like, oh, it's falling into a place where it's bounced on heavy volume 5 times. So maybe that's a decent support area, or, oh, it's bouncing off a moving average and that's provided support a few times. So it's not so much the chart's broken, so I'm not adding, but it is well, the chart looks really ugly. So maybe I should go a little more slowly, and leave myself a little bit more flexibility while this thing repairs in the eyes of the TA, of our TA friends. So it's not a it's not kind of a yes or no deal breaker or decision maker for me, but it's a how big and how aggressive do I want to get. That does play a role. If just something just looks like a falling knife, maybe instead of a 20% ad, it's going to be a 4 or 5% ads, and try to space that out in increments if it keeps getting uglier.
Got it. And then on the AI side of utilizing it as a tool for research, have you found any pieces there? Because it sounded like you were more like, hey, I'd rather do the
Yeah.
long route and do it myself, make sure I'm right. Like, could you use it for culminating these reports? You're like, hey, go out and find me all these reports, and then you actually read the reports yourself, or different pieces like that.
Yeah, I think for me, I'm a daily active user of Gemini, so I don't want to stick my nose at AI and say it's stupid, because it's so valuable. But I mean, hallucination rates on these models are still at like 20-25%. So for me, that is so uncomfortable relying on it to give me accurate information. 4 out of 5 times it's going to say something incorrect, and I'm going to look like an idiot because a model gave me the wrong thing, and we're a long way from that not being the case. So for me, I'm pretty sure I know what the right answer looks like. I'm pretty sure this is a good explanation. I'm pretty sure I just articulated this well. Hey, Gemini, am I an idiot, or does this sound good? And that I feel like, if you and I like to ask Gemini and ChatGPT and Perplexity most of, and Grok, sorry, for our Twitter friends most of the time, because they are wrong a lot. So I want to make sure, if this
Yeah.
is really important, I needed to get this 100% right. If Gemini says it's right, but that's when they hallucinated, I need to make sure ChatGPT says it's right, and Perplexity says it's right, and Grok says it's right, because there's a much lower chance that they're all going to mess up that query, 4 times. So for me, it is I've done all the research. I'm not a cybersecurity specialist who knows how to stop 0-day attacks and does that for a living. So please, I said this in a way, and I'll always preface this with, this is not for software engineers. This is not for people who need to understand acronyms and lingo. This is for an investor community that needs to understand the investment case and what matters and what doesn't. Is this 100% accurate, or do I sound stupid in any places? And there, I think AI has been extremely valuable for me, gaining confidence in kind of more quickly expanding circle of competence, and more quickly gaining and needed information to offer more valuable opinions in some places.
Yeah, ChatGPT is like, this company made $500 million in profit last year. It looks awesome. And you're like, ChatGPT, this company lost 500 million.
Yeah.
It's like, oh, you're right.
Hey, my bad. It's like, okay, well, I don't. So, do I ask you this follow up question, or like, what are you
Yeah,
gonna say?
yeah.
Yeah.
You're correct. On
Yeah.
second thought,
Oops.
yeah. Whoops. How do you recommend just retail investors in general just filter out noise, hype, narratives, stay grounded?
Yeah, I think your Twitter. I'm assuming that most people listening to this are on Twitter or Threads or some form of social media. That can be your one of your most valuable tools, or that can be one of your biggest enemies, depending on how you use it. If you follow people like Wolf Financial for relevant, timely information, it's gonna be valuable, and it's gonna you'll learn about things more quickly, and you'll be more in the loop. And there will be this random person who somehow got access to these 7 reports they should not have access to, and they decided to publish them on Twitter, and now you have thousands and thousands of dollars worth of research and information that you never would have had. Like Twitter provides things that are so valuable, but it also provides 9 things that are so distracting for every one valuable thing. Not 9 to 1, 2 distracting things for every one valuable thing it provides. So I just think curating your follower feed, and maybe even if you love sports and you love politics and you love stocks, maybe have 3 separate accounts for sports and for
Mm,
politics and for stocks, because you want your For You page to your For You page can get so toxic and so upsetting so quickly, if you're clicking on things that aren't related to stock markets on under a certain account. So just making sure that your Twitter account is your stock market Twitter account, and you are interacting and engaging with stock market content, so that when you scroll down your feed for relevant information, you will get way more of that relevant information. You'll still get a lot of BS, and you'll still have a lot of things to ignore, but you'll get a lot more of the good stuff. So yeah, I think Twitter is super valuable when used correctly. I think it's amazing for inspiration and terrible for unconditional following kind of thing.